So Intel just dropped their earnings result and it was better than I was expecting. I actually did not expect them to actually beat estimates that analysts had for earnings, but they did. I actually just finished listening to the earnings call and there was a lot of good juicy stuff that I heard on the earnings call that was pretty interesting for me to learn about and to read about on that call, which is one of the things that I like to do whenever I'm interested in a company and I'm really paying attention to a company. I listen to earnings call, not because you can't get all the numbers and information from just reading the highlights, or rather just reading their financial reports, but because the analysts that cover the companies have specific questions that they will ask the CEO and ask the management team that actually help me to understand more about the business. Is why I love to listen to earnings call, and they can give me more insights because I don't spend all my days or every single day looking at companies and analyzing companies and understanding companies. Those analysts understand the company a lot better than I do, which gives me opportunity to learn while I'm listening on the earnings call. So when they ask questions, I'm paying very key attention to how the CEO and everybody's answering those questions. But anyway, let's get right into the earnings breakdown and what Intel just announced from their earnings presentation that they had earlier today. The biggest shocker, like I said earlier, is the fact that they actually had increase in revenue. I was not expecting this at all. I was not expecting, like I said yesterday when I talked about what I was expecting from their earnings today, I was not expecting them to make more money than they did last year, because I expected the revenue to actually come down, because I believe that last year a lot of their earnings was due to COVID induced higher purchasing prices for PCs and those kind of things. So I was not expecting them to announce that they actually had a growth of 2% year over year in revenue. So that was pretty shocking. But even bigger than that is the fact that gross margin actually increased from this same time at the beginning of this year, and even compared to what it was last year, which is also very impressive. But the one thing that they dropped was their outlook for Q3. When they said that Q3 outlook was going to be 55%, which is lower than what it is right now, people were not very happy with that announcement. If we look at the stock price, it's so interesting. You could tell how people reacted as they read deeper into the stock price. It started off and they dropped the earnings call and it was like, oh my God, they beat earnings. And then as people started reading more and more into it, it was like, oh, they're predicting lower earnings. You have to remember, the stock market is a future predicting machine. It's thinking about the future. It's looking at cash flow of the future. It's looking at revenues of the future. So when they're announcing that gross margin is actually going to be lower, people are not very happy. So you just see it go, oh yeah, oh. It's just like everybody gets sad. So it was pretty interesting, but gross margin is going to be reduced moving forward. Again, that has more to do with the fact that they're going to be investing into the business. So CapEx is going to be higher. They're expecting to continued pressure as they continue to develop their 7nm processor. I'm going to pick up my notes so I can read a little bit. I wrote a few things down as I was listening to the earnings call. So that was one of the key things that I took away, was the gross margin is going to be lower because they expect to continue investing in their 7nm processors, which is good to hear. I'm okay with them spending on the CapEx as long as it provides results. I don't just want them to be like, oh yeah, we're spending. But so far it seems like they'll be able to get the results that we expect. The thing that they saw the revenue grow the most, which is something I was not expecting them to announce, was when it says client computing, that's things like your PC, your laptops, your desktop, those kind of things saw a higher growth. And even bigger than that, their operating margin actually increased. Higher is better when it comes to operating margin. This is how much, the minimum amount of money you need to run your operation. So the better you are, the more efficient you are, the higher those margins in, and the more profit that you can make running off of those things. And that's just due to the fact that they've had 10 nanometers for so freaking long. They've had 10nm processors for so freaking long that they're better at creating 10nm processors. Like they say over here, improved 10nm production costs, which to me, that's not a good thing, because y'all should be on 7nm right now. So I want to, this is like, yeah, we're doing good. It's like, whatever. They're always going to spin it in a positive way. But me, I'm just like, yeah, the only reason you're so good at it is because y'all didn't invest to be better at 7nm. Anyway, but I'm not going to rant too much about that. We already talked about that yesterday. The other thing that they talked about on the call was they are seeing inflation eat into their bottom line a little bit. They're seeing the cost of having to produce some of these items actually increase. So per chip, it's actually, they're taking a lower profit margin per chip, but they're not passing those costs on to customers, which I like that. them not passing those charges off is a good chance for them to be able to maybe, just maybe, win some customers back. Unlikely, but possible. I really like that. That just reminds me of the Costco model, where a lot of cost isn't passed on to the customers, but Costco will eat it so that customers can continue to come on. And over the long run, they're going to see the benefits of doing those kind of moves, especially if they believe that inflation is not here to stay. And they're like, you know what? We can eat this cost in the short term. And then in the future, as long as people stay on with us, they'll actually see the benefits, or we'll see the benefits of doing that. So that's good news, or I thought it was good news. The one negative thing, and this is the one part of the entire business that makes everybody who looks at this kind of go, Intel, this is where people are scared. And when they're looking at investing in Intel, they're like, we don't like this. We do not like this. And that's with your data group center. Right now, we're seeing cloud continue to explode. Like if we look at one of my favorite companies, Microsoft's cloud business is exploding. Google's cloud business is exploding. Amazon's cloud business is exploding. Alibaba's cloud business is exploding. These are businesses that I'm invested in. On the other hand, the manufacturer of these processors, their cloud business is not exploded. Why? Because 7 nanometers is not doing they're not there with a 7 nanometer processor. On here, it says that revenue is down on challenging compare and competitive environment. AKA, just say AMD is dominating, y'all. Like, if we just compare and contrasted AMD's cloud business to Intel's cloud business, as Intel shrinks, you can see AMD's go up. And also, if you also compare it to AMD, Intel, Nvidia, it's like as Intel shrinks, AMD goes up, Nvidia goes up. So that's the problem right now. They are losing market share to those other companies because they did not invest on time in 7 nanometer processors. And even now, they should be also trying to get 5 nanometer processors as well. So operating income is down due to the fact that they are starting to invest heavily into their 7 nanometer processor. That's why we're seeing the operating margin kind of go down a lot, because they're continuing to put CapEx into that to make sure that they're providing what their customers actually want. Again, it's a good thing, but let's see what the results come out at, because already they had a delay earlier this year, which was what actually tanked the stock price earlier this year, when it was like $60 something, and then it tanked all the way to like $52, which was a good buying price for me to be able to get in a little bit more. But that was one of the problems that they face, is they just had a delay with that whole procedure. So we'll have to see, and they cannot continue to be behind. They have to start innovating and not just stay with 7 nanometer. I've alluded to it a couple of times already, is also 5 nanometer as well, which one of the good news I heard when I was listening on the call was an analyst brought up the hire of their new CTO, Greg Lavender, and he was speaking very highly of him. I don't know who this guy is, but apparently he's one of those guys that has been working with Patrick Ginsler. And so they speak very highly of him, and he's going to be the new chief technology officer, which means that innovation and all that stuff is going to be through him. I hope he's going to be able to attract more talent and come through the door so that Intel can be one of those most innovative companies once again, not a dying dog that we've been seeing for a while now. So that's just a few things that I took notes on from the call. The only other thing that I'll say before I leave here is Intel's Mobileye division and Internet of Things is actually growing massively. Like if we look at how much they've grown year over year, it's grown almost 124%. Yeah, 124% year over year growth for Mobileye. If you don't know what Mobileye is their autonomous vehicle computing unit within the business. So this, I expect it to continue to grow as we see more announcements. I was just reading earlier, Mercedes just announced that all its vehicles are going to be electric by 2030. So as we see more cars and more automobile manufacturers announce that they're going fully electric, I also expect them to start having some of these processes being baked into their vehicles as well. So I expect this unit to continue to grow. Now, Internet of Things, those kind of chips are like small chips, everything that we say, oh, this is a smart whatever. Like we have smart light bulbs, we have smart fridges, we have smart microwaves, smart speakers, all those things. The chips within those smart devices, you can get them from Intel as well. So seeing them continue to grow out those divisions and seeing them continue to make money from those divisions is going to be very, very good moving into the future. So these are some of the things that I took notes on when I was listening to the earnings call. Oh, there's one other thing that I'm forgetting about. A good question that was brought up, and I really wanted them to say, but they didn't answer it. But somebody brought up a good question of who exactly is going to be the target customer for Intel Foundries, with them investing $20 billion here in the United States and another $20 billion in Europe for building out foundries. And they were asking them, who exactly are you building this for? Because some of your competitors like AMD, Nvidia, are you actually building it for them or what? Gensler actually answered, and he was like, well, we have a shortage, first of all. So regardless, this is built for everyone and built for whoever wants it. But priority is actually Intel, because we actually need those chips manufactured faster for ourselves. And then he explained that Intel is actually behind, which they are. And I'm glad he didn't try to hide this. He actually said Intel is actually behind competitors in manufacturing and being fabless in a lot of fabless manufacturing processes. So I was glad to hear him actually say it out of his mouth, and they need to invest more into those areas. So that's good, because one thing is investors don't necessarily like CapEx that much because it's money coming out of their pockets. They want their money in their pockets. But regardless, that's what he was explaining. But yeah, that's just a few things that I got from the earnings. Let me know, what do you think about the earnings? Is this a good direction that Intel is moving in? I think it's a good direction that they're moving in. I'm glad I didn't hear anything on the call about, oh, we're making more share buybacks. I'm so happy that I didn't hear any of that stuff. I'm happy to see how this plays out. This is going to be a few years for this thing to play out. We'll see if Patrick Gensler can actually turn around this business, or if he's just talking a whole lot of smoke. And then if he is, well, then I was wrong on my investment thesis, and we'll just move on from there. You know, it is what it is. It's either I'm right or I'm wrong, and we'll see what happens from there. But anyway, that's all I got for y'all. I hope y'all learned one, maybe two things out of this entire thing. And if you did, hit that like button. If you loved it, hit that subscribe button. But I'm gonna catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all, and your boy is out of here. Peace.